Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, January 23rd, 2025. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the ES in the daily time frame. A great stretch here from the prior Monday. Big time check mark continuation to the upside. The previous session here, mostly range bound for the day with an upward bias. Had an upward bias here in the pre-market early RTH session, then went sideways here for much of the day. Only about a 55% of ADR day. You can see right here the compression on the advanced ADR indicator, and that tells you again that you're kind of building some energy at these highs with a shot at a continuation to the upside ahead. This market again rejected the key range low here, and that suggested that we would see a bounce back toward the midpoint of the key range. And then if we can push through the key range, it opens up a move to the top of the key range, which coincides with all-time highs. That is your December high, previous month's high, previous year's high, previous quarter's high. It's the all-time high. So we're looking at a continuation toward that level. That's 61.6375. with a shot to even push perhaps a bit beyond that level. So more upside could still be ahead for this market. And the early pullback is going to be one to keep an eye on here. Is that the strong developing low for the morning? If it is, we can look the other way. About 50, 60 points at the very least. Right now, this market is averaging 84 points per day on a 10-day basis. It's averaging 81 points per day on a 5-day basis. That's a lot of points here. That's a lot of points. And if we're getting a lower range day, back-to-back lower range days, then perhaps we're looking at about 60 points of range. If we're looking at a high range day, 80 to 100 points of range. Yesterday's range was 48.75. Relatively low range day, again, compared to the volatility we've seen lately. Again, look at all of this volatility. That all came about on this 200+% of ADR day there. That was actually closer probably to 500% of ADR. And look at the volatility we had seen prior to that. Just a different volatility profile moving to the right. So, depending on how we play out here today, that low could either give us a low range continuation toward 61.50 or even barely get into the 61.63 and get that new high. If we start to get a high range breakout, then again 80 to 100 points could be in play here for this market. Now, a potential market moving event here today is the president speaking at 10 a.m. Central. So President Trump speaks at 10 a.m. Central. That could provide volatility later on in the session. Looking at the NQ here, similar bullish bias here since that Monday reaction. That was also a key range rejection as well. Price return back to the key range midpoint. We're now pushing through that midpoint, which again opens up the previous high here. Just like the ES, that's the previous month's high, quarter's high, year's high, all-time high, and that key range high, and it's 22,450. On this pullback here this morning, again trying to find the strong low. If that low this morning is the strong low, then we could be projecting higher, 350 to 400 points of range, and that could give us a pretty decent target. The low right now is 855. You know, you're adding 400 to it. That could be around 255 to the upside. So somewhere in here if we go 400 points higher. Yesterday, relatively low range day. It only had about 325 points of range. That's one of the lower range point totals that we've had in a while. Since, I suppose here, that was 343. This one right here was 282. So everything else has been above that point total here so far. So can we get 350 to 400 points of range today? And again, does volatility pick up later on in the session with President Trump speaking? So any pullback here could still be a buying opportunity for a continuation up as this market attempts to make a move and a return back toward the key range high and new all-time highs. Looking at crude oil, this one right now kind of break even on the day. This one 75.45 at the moment. The previous session, super low range day. $1.17 of range yesterday. $1.17 of range. The early overnight range held throughout the rest of the RTH session, and it became an inside day. An inside day, you now have yourself a developing 2-day compression, which really spans to the end of that prior day here, which was Tuesday. So you actually have some of Tuesday's range into today's range, which kind of makes a 3-day development down there. 76.50 is still the level to break to the upside in order to open things up, and a failure through 75 opens up a continuation back down toward perhaps as low as 73, 72. So right now, really well-defined 3-day developing compression here. 75s on the low end, very clear support. Price bounced off that level early in the wee hours of trading here. So continue to have a very narrow range of price action, just 86 cents of range following yesterday's $1.17 of range. And this market has been averaging over $2 per day. $2.30 on a 10, $2.24 on a 5. And that's based off of yesterday's closing values. So, very, very compressed price action. The biggest pullback we've seen here since early November. Right back here. That's probably the biggest pullback here we've seen since then. I mean, that's 80, 77 back to 75s. So that's a nearly 6-point pullback. Over here we had nearly 6 points of pullback as well. So one of the bigger pullbacks we've seen in a while. But if we can find a strong low here soon, whether it's today, whether it's tomorrow, that could lead to a bounce back toward the 80, 81 level up ahead. One last thing, crude oil inventories moved to 11 a.m. Central today, and that could provide a bit more volatility for this market later on in the session. All right, looking at gold futures, this one down right now, nearly 0.9%. Big pullback here. Yesterday really failed to get going to the upside. It did have an early pullback and checkmark move higher, but just could not get through the 75s, and instead closed near the center point of the day's range in a relatively narrow range day. So yesterday's range was 18 points of range. That is far below the average that it has been trading on a day-to-day basis. It's been anywhere between 35 and 40 points of range, and it just couldn't do it. Right now, it is below the previous session's lows. The last time it was there was Monday, below the previous session's lows, and it quickly turned and rallied. Do we see another strong low develop like this that can give us a failed new low continuation to the upside? Right now, as we speak, it appears that a developing low is in play at the moment, and that could lead to a reversal on an intraday basis back toward the 2760 level, and that could begin a pattern here of failed new low strength. So keeping an eye right now if this low can hang in there. It's a lower low rejection developing. It's still very early in that rejection, but from an intraday basis, perhaps a 2760 target could be in play, and if that develops, we could see a swing continuation to the upside. This market's still working higher within the upward trending structure, still holding above the 8-period PIMA, and this market too working its way toward recent all-time highs at 2800. Looking at the YM, this one marginally down at the moment. The previous session was about as tight as it gets for the YM. 221 points of range yesterday for this one. That was 30-something% of ADR. Just very, very compressed. The last time we had something that narrow, you probably had to go all the way back to November here. That day right there was 214 points of range, and that was the day following the Election Day victory rally. So that was the day following Election Day, massive rally of 1,500 plus points. The next day was a holding pattern of just 214. Yesterday was 221. Today, a developing range of just 117 points of range. This is about as narrow as it gets. Very, very compressed. Still a super bullish move, especially after that checkmark rally that we saw develop here on that Monday. We got the push through the 43,750s and 43,800 level, which was huge, and we're now working to the key range high, which is within striking distance at the moment. So can this market find continued support on any pullback for a stretch to the edge. Can we go get the all-time high at the quarterly high? And based off of the push that we have seen through the previous midpoint here, previous midpoint of the month, previous midpoint of the quarter, that would suggest a continuation toward this blue line up here, which is the previous quarter's high. So still looking at further strength until proven otherwise, until we see an equal and opposite rejection. Something strong but in the opposite direction that would suggest that the move is over. So any pullback continues to be a buying opportunity in this market. Bitcoin here down 2.3% today. This one put in a new all-time high 110s Monday and is now pulling back a bit from those levels, 102 at the moment. Still stuck in the range. We've seen this range develop here since really the end of November, right here as the end of November, where it hit the center line of that range, which is 100K. We've seen 10,000 on this side to 110. We've seen 10,000 on this side to 90, and it's a 20,000 point range right now. We have developed a key range here, which continues to contain prices here. We can continue to see a push to the upper edge, to the lower edge, and see further trading range action develop in this market. Still with an upward bias until proven otherwise, and still with the potential to trap below this key range low. So 89,525, anything below there could still offer a long-term opportunity to take this thing back to 110 and the 100% target up above at 130K. Any pullback as deep as 84,369 could be an optimum entry zone for this market for a long-term continuation to the 130 level. So still building out this key range right here, still building out within the center of the zone, and we could continue to see moves at the extremes until an expansion day is seen. Likewise here, ETH down 1 1/3% at the moment. This one is also stuck within its large key range. This key range developed back in December, bounced back to the midpoint here, and did already have one reaction and rejection of prices below the key range low. Just missed out on getting the 25% level, which is 2850. Of course, this one continues to lag behind Bitcoin at the moment, but is building some energy here at these lows, which could suggest the next wave of strength may be coming up ahead. As I've mentioned before, the long-term target on this one, based off the key range and based off market structure, 5,200. So if we get a pullback as deep as 2,800 or even 2,600, those could be long-term home run entry opportunities for ETH for a long-term continuation into 5,200 up ahead. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.